Hi, everybody. This is Gary Dean with Sentiment Timing, and today is January 5th, 2023. And I'm here with my partner, Woody Dorsey. And what we're going to do is go over, what Woody's seeing in the market and give you guys a little verbal commentary as far as what's going on. So, hey, Woody, how you doing today?
Good. Gary, I
Excellent.
just thought this would be interesting.
Yeah, it is. So, I guess let's just jump right into it. What are you seeing with the markets right now? I know you had said in the that there was going to be an October low, and then after into December, it was just going to be a sloppy market, and that's pretty much what we have seen so far.
Yeah, it's, as I've been saying, it's a very messy situation. It's a messy market. Nobody wants to hear that they went up or they went down, but everybody wants to make money. Everybody wants to beat the market. You can't do that. There's nothing to do. And look what's going on.
So if you were going to give the people here a just and as far as what you think in the next, say, the short term, do you see any, are you anticipating a low or a high? And then is it do you see any swing trades or anything coming in the future, or is it just going to be pretty sloppy throughout 2023 again?
Yeah. Well, the main thing, the message for people is prepare for a messy market. That's what we have. Don't listen to everybody who's got an idea of when the pivot is or whatever. It's a bunch of crap. Just take it one day at a time in this market. Now, to your point, I did think we would end up getting a little more of a rally this week. Of course, every day is different. It's up, down, up, down. But I do have, because you asked me for it, I have a few things to talk about. I haven't talked about yet, but I wanted to explain what a messy market is. And stop trying to beat the market. The market's always going to beat you. Is that we're in a smaller congestion now within the congestion, and I do think, which is new, is that I do have a low around mid-February, so we're going to have some kind of a more slop or a failure, and then we're going to rally until mid-April. That is the trend duration profile from the October low. There is a kind of a hidden architecture in this market. But if we can correct a little bit here the next few weeks, that we'll get another rally maybe into April, mid-April, and then they're going to hit the market again. And then we'll go up again. But it's nothing to, don't focus on, hey, the market's going to go up or it's going to go down. It's just, you just have to trade it.
So I have a question for you on, your dates that you're looking at. Let's say for some reason we have a rally into the February time period. Would that then be where you would be looking at it as a top, or it's no matter what the market does, you're looking at the February time period to be a low?
Well, I do have a low in February, so we'll see what happens. However, you bring up a good point, which is that this is a market in general also where you have to be very flexible what's going to happen. Anything can happen in terms of the market, in terms of the Fed, et cetera. So I do have it as a low, but we'll see.
Right. That's everything is we take it week by week, and as we approach those dates, we'll obviously that time period, you will then zone in on specific days or dates that you're looking at when there may be a short term or long term low or top in it, because that's what basically what I've seen with the reports that have been coming out is you have like the October low is a perfect example. Is you had mentioned that back in July that where this market's going to be heading down into an October low, And then from there, your shorter time periods, then we're throwing out specific dates. Now, is that the same thing with what's going to be going on in February?
It's always the same. Is
Okay.
that there was an architecture, there was a low due in October, and maybe another time we'll do a video report. We can look at that October low. There were certain characteristics. So we're rallying from the October low. We're still rallying from the October low. That is the low. Uh, and what I think is interesting is coming up, we're going to have some highs and lows, maybe even more dramatic than we've had lately. But there's not really much to do. There's nothing going on here. They beat them up every day, and then they come back, and
Yeah,
one.
it's been crazy. I call it a bipolar market because everything is economic news that comes out, whether it be like today, the jobless claims. That, the S&P, the futures were up like almost 20 points. They came out better than expected, which typically would be better for the economy. But right now, investors are more interested in, what's the Fed going to do, and that always makes things a little bit dicey on relying on information that's going to be coming, data, economic data that's going to be coming out, and how the algorithms are going to, portray what's going on.
Well, no one knows what's going on. That's the message, and that's what our investors should be focused on. They don't know what's going on.
So let me ask.
But
Oh, I'm sorry. Go ahead.
I'm going to tell you is that the problem generally is that we've entered a new phase in financial culture, which I mentioned a few weeks ago. So don't expect anything to be the same. Now, obviously, inflation is a big part of that, and it's not going anywhere. And the interest rate profile, remember, interest rates could go up for 40, 50, 80 years. This is a big profile.
Right. That's what you've been showing, actually, that are saying that, interest rates back in whatever time period you had, went up for 40 years or something to that extent.
Well, that's what could happen, and it's already starting to happen at the margin. So we just have to deal with we're dealing with an environment where, first of all, no one knows what's going to happen. Number two, interest rates are generally rising, and inflation's not going away. It's a different environment. That's the main thing. Now, I've got some really good news for you because you forced me to do it, Gary. I'll tell you when the next high is going to be in the stock market. Hey, wouldn't that be great? Isn't it what everybody wants? I mean, there is such a thing, but, it's like, it's crazy the things we focus on. Anyway, I'm looking back at my history, and I have a high in the stock market in 2026. Hey, it's great. Yeah, but how does that help you make money? This is where the big picture can be very disturbing.
Right.
And the people have opinions about what's going to happen when with the Fed and this and that. It's like they fill your head with sugar plums. You just have to trade the market as it's trading. But I do have a profile for that. Yeah, so that's interesting.
Well, as you said, like when you had mentioned the 2026, the high on that. I mean, we'll have 500 moves up and down before we get to that top, and that's really, so we have the bigger picture that's there, but then what we do as a service is we narrow it down into say mini swing trades that typically we look for anywhere for 2 to 4 weeks. But when we get into trade mode, which I that's what I do, I just tell them just to shoot for a target, and once it's there, just get out of that position, and then wait for the next setup. Because right now, I've been, with the trade that I'm in, I was following the October low that was called, and it's been working out great. It's just been frustrating from this part of it, where we're seeing the market going up and down, but overall, it's things have been doing exactly what you said, especially with this sloppy market, and that's why for me, because we've been some of the trades we've been in have been well over 100 points, but then all of a sudden some news comes out or some data and the algorithms are in all out sell mode and we're back at the lows again. And that's what I believe we're in this, what you had said too. We're in a range right now where, we're making higher lows and lower highs. So that would, be looking at some kind of triangle or something from a pattern standpoint.
Yeah, and we may be flattening out here, but the key point are there are certain points like the October low. That was the low. Okay, so you used that well. That was the idea. People didn't think that, but that's what happened. Now here we are. We're kind of flattening out. And what I'm telling you and everyone is that based on most recent research is that I think we're going to see a low in mid-February. So what does that mean? Well, we're topping out here, so it's not a good time to be very aggressive on the long side.
Right, right. And that, you were actually looking for some type of top in January. So I mean, it may be that we already saw the top came in December. It was a little early, or we get that last little, maybe some information comes out that's bad news as far as data, and people think the Fed is going to, stop raising rates, and they shoot the S&P up 150 points, which I've never seen that before in my lifetime. Just the size of the moves that have been taking place, and that's one of the things that it drives everybody crazy. And what I try to explain to people is, what one of our biggest jobs as by writing the sentiment timing newsletter is to help traders control their emotions, because they're they're if they're making an emotional trade, it's going to be wrong 99% of the time. And so we're doing almost two different reports in one, where we have your data that only about, and what the sentiment is doing, and then I'm taking that data, whatever you're anticipating, and trying to chart it with where these moves could go. So we're giving actual targets in lows and support levels. So it works out pretty good. And I, like I said, I'm moving into trade mode right now, where if we have a 30, 40, 50 point gain on the S&P, step aside. It's just one of those things where this market's just a little crazy right now. So what would
Well,
one question that I would have for you is, like, if you were, somebody came to you and said, I need you to give me some type of trade that I should do, what would be your recommendation? Would be cash?
well, first of all, yeah, cash be deceptive, but as you say, but the market is always crazy. It always has been, and it always will be. So expect the unexpected all the time. But as you say, it's very important to have a sense of the gestalt. That is the vibrations. That's what I do. Is I look for what's going on. Like that October low, we're rallying. We're rallying. That's the basic gestalt. That's what's happening. So you can provide some technical bookends around that to trade it. So that's fine.
Exactly, and that's really because what I've like, and I'm sure you've noticed it when you get your people on Fox Business or CNBC, the so-called gurus, and they'll sit there, and when the S&P was down at 3,400, they're saying it's going down to 3,000, this and that, and then once the S&P got to 3,800, they're coming on saying the market made the bottom already, and it's like they're just basically following the current trend. They're not giving any information that's going to forecast or anticipate what's going to be happening, because I didn't see anybody, and I mean anybody that came out saying that we're going to make a top in August and the low in October, and that's pretty much exactly what took place on that. Was you let our investors or our members know in July, late July, the pattern that was going to be played out, and it was probably one of the best calls I've seen in a long time on it, where it was exactly what what you suggested was going to be playing out.
Yeah, well, nobody knows what's going on. All these people on TV. That's why it's interesting sometimes to watch them because you know they're wrong.
Right.
But what their projections are sometimes what people think is going on. I think it's very curious actually that the big thing, all the big things, like the big thing right now is, oh, buy bonds. Bonds are great, because we don't know what's happening. And bonds aren't really great, because they're in a secular bear market. But so you have to kind of do a little bit what other people are not doing,
That's
you
awesome.
know.
Yep. And that's one of the reasons. I mean, I've had a lot of people send me emails and, just friends asking me, everybody that I'm listening to is saying 2023 is going to be a disaster. And, I just said, listen, I said, well, just for my, say, education from following you and, doing this and being in the market for a while, typically when everybody is saying the same thing, it's not going to do it because it's almost like reading or the sentiment that you give out. If we're at 90, or let's just say a consecutive 0% bullish sentiment readings, everybody's bearish on this market, and typically that's when there's going to be some type of low in there because everybody's expecting the market to go down, and vice versa on the upside. But the upside, they can stay at the higher bullish percentage for quite some time, which I've noticed just from your charts.
Yeah, the market's just a big game, you know that. So it just goes up and it goes down.
All right. Well, let's do
Nope.
this. Do you have anything else you want to tell everybody here, or maybe what we can
Yeah,
do is just get together, next week or whenever, and show some charts and try to do this on a weekly basis.
yeah. I hope people find that useful. I'm not sure everyone understands what I meant by the October low and the messy market, but now we know that we're going to have a correction and then have another rally, but it's just a big mess.
Right, right. It's a because also just from a technical standpoint is it's not giving any warning signs. Meaning that like I'll look for some type of divergences on my momentum charts or something with the NIAD, and we're getting these big moves up and down with zero warnings, and that's where I get frustrated from a technical aspect of it because I like to see, okay, you're looking for a low. I'm seeing bullish divergences. Here's the areas to buy, and we should go. We're getting moves up and down that with zero warning signs whatsoever, and that's the messy market that's there, and I think why we're seeing a lot of people frustrated in this market.
Yeah, it's definitely frustrating, but you have to try to understand it and not try to beat it.
Right,
That's the way people are trained. Oh, I'm going to figure this market out. Go ahead.
right.
You know.
Let's see how you make out.
Yeah. So let's talk again. All
You
right.
got
Thank
it.
you,
Thank
guys.
you, Woody. And everybody, I'll be putting this, we'll be trying to do this on a weekly basis, and have a great day.